So we've dove into chapter 2. We only have 3 sections to go. The first one is just very, very much theory-based, like understanding the words associated with the accounts and the debits and credits. Next week, we'll get into the other sections. So without further ado, let's begin. What's an account? Well, there's very specific parts to an account. If you think of ALLO, so let's just focus on assets for just a minute. Are there accounts that are impacted or under the asset umbrella? Yes. There's cash, there's supplies, there's equipment, and accounts receivable. We own those. Well, those little four guys that I just mentioned, cash, supplies, equipment, and accounts receivable, are all considered accounts. So if I would list this, we know of there's lots more under assets, but cash would be its own account that we eventually make into a T. Okay. Basically, an account records the increases and decreases of a specific asset, liability, equity, or then revenue or expenses. And all you need to know is that each account has a debit side and a credit side. So right here, if instead of writing account name, I could put cash. On the left are the debits, or on the right are on the credits. Now, even if we'd move over to the ALLO side, the other side of ALLO, like if we'd put capital and put that in, I can still put the account title here. It still has a left and a right side. It just acts different when we cross over to the other side of the accounting equation. Okay, and we'll get into that in a little bit. The illustrated version of an account can be made into what's called a T account. That's like a visual representation of the account itself. When you make a T account, it always has these parts. It has the account name. It has a T, hence the name T account. There's always debits on the left, credits on the right. In this section is where your numbers will go. And then notice what they do. They make the T into a capital I, and here's where the totals for that account will go. So that's what you need to know about a T account. It's got a title, account name, a debit and a credit, numbers, and then what's called the balances. Look on your handout that I gave you. Do you see all sorts of little T's there? This is going to get very repetitive today, but I'm going to build all of the mini T accounts with you today, so you can see visually how this looks. A little bit more about debits and credits. Accounting, the way I'm going to teach you and the way the book outlines, is what's called the double entry system. So each transaction must affect 2 or more accounts to keep the accounting equation in balance. You have to debit at least one and credit at least one, and they always must equal. Here's what I love about accounting, because even if you're a little fuzzy or a little gray on, say, a transaction, you now know that you at least have to have 1 debit and 1 credit for every transaction. So at least 2 accounts have to have something happening on the left and on the right. And you might know half of it. Like, for example, if you pay your liabilities using cash, do you know cash is going to be one of them? Soon you're going to realize that if you're going down with cash, you know that's the credit. So if I use a credit in one place, what does the other half of the transaction have to be? A debit. Okay? Or if I get cash, then I'm going to know, well, cash is my debit. The other one has to be the credit. So oftentimes a transaction might be complicated, but one part of it might be really easy. So if you know you have a debit one place, even if you're a little fuzzy, you know that the other one has to be a credit, and you'll soon start to understand that pattern even better. So double entry means we have to have at least one debit and at least one credit. So we've got something impacted on the left and the right of those T's. Let's get into building some T's. The reason I really honed in on this large T early on is because I think you see a very quick left and right side of that T. Would you agree? You can see a left and a right side. This is the basic accounting equation. Assets equal liabilities plus owner's equity. Your test scores last week proved that you understand that. Okay, so, but if I'm ever going too fast with that concept, stop me. So what I want you to do is draw yourself an umbrella over the word assets. Draw a little umbrella. I actually used to physically hang umbrellas in my classroom with the accounts that are impacted underneath those umbrellas hanging down, but they kept falling down. Like literally would fall on top of me. So I got rid of them. So right now, as of now, there's a lot more assets that I'm going to teach you about, but right now we've learned about 4. We've learned that we have the cash account. Well, we just made that into a T account. Does that have a left and right side? Let's hold that thought for a minute. We also learned that the next most liquid asset, I talked about liquidity a little bit last week because you guys were asking about it, but the next most liquid asset is accounts receivable. Because if I literally had to go knock down the door, maybe hopefully Mr. Viss doesn't respond there. I just knocked on his classroom wall there. But anyway, knock, 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 AR, you owe me money. Could I get the money if I really tried? Yeah, okay. Another asset that we own are supplies. And then we also learned, that didn't draw a line just now on yours, did it, when I moved that? Okay. Another one we learned about was equipment. Assets are all things that we own. Okay, we're on the left side of the big T, aren't we? I want you to write that. Don't write the word debit, but just write left side of big T. That's going to be helpful in just a moment. It doesn't matter which side of the big T we're on because left and right is left and right. Debits on the left, credits on the right. Debits on the left, credits on the right. This was the rap that I've been kind of making your ears bleed with in the last few days. I could even debits on the left, credits on the right. I'll even sing for you. Are there left and right sides of those little baby T's? Yes. Here's the new piece of learning, because you learned left and right at a very early age. It's just that now I have an accounting term that goes with it, a debit and a credit. Let's jump ahead. I'm going to come back to this. We're going to talk about the pluses and minuses in a minute. But let's jump ahead to the liabilities part. We still have the big T. Let's make an umbrella. Liabilities are what we owe. And we're also on the right side of the T this time. What 2 accounts fall under the liabilities umbrella that we've learned about so far? What's the more short-term one? Accounts payable. Let's even write ST on top of that for short-term. And how about the long-term one where you'd go and get a loan at the bank? What's that called usually? Notes payable. Thank you. Who cares what side of the big T we're on? It will matter in a minute. Do these little T accounts still have left and right sides? What are the accounting terms for left and right? Debits on the left, credits on the right, just like the wrap. If we do owner's equity while we're marking everything up too. Okay. We've got capital. We've got revenue. Here's where there's a little curveball thrown at you. We've also got drawing. And what's the other one under that one? Any of the expenses. Now, soon enough, you're going to learn that each expense is going to have its own little T account. Okay? So you'd have advertising expense. You'd have a utilities expense. You'd have each of them would be their own T, but can just for now, for just general learning, can I just say expense? Soon enough, you're going to have lots of T's for that. Now, while we're in this section, I want you to do something like this. But let me pose the question again. There's 4 T's there. Do they each have a left and right side? Yes. Debits are on the left, credits are on the right. These all fall under the owner's equity umbrella, which basically calculates our worth. And we're still on the right side of the T, the big T. We're going to come back to these naughty accounts in a minute. Do you feel like you understand left and right, debit, credit on all these accounts? So every account has a account title, the T that divides the debits and the credits, and then when we get into the transaction stuff next week, we'll balance everything out. So we'd know how much cash we have at a given time, how much revenue we have coming in at a given time. So those T's are basically a tool. You're not going to see real accountants drawing T's anywhere, okay? But remember, they don't give you a driver's license without taking the class first. We're like in the class right now. Okay, go back to your assets. Okay, tell me, what side of the assets, or what side of the big T are all the assets on? Left. Do we have some left sides of all of these baby T's? So that, my friends, is where I want you to put a star. Nowhere in the book is it going to say to star it. The book will tell you that that's where the normal balance side resides. Okay? So you might want to put star equals normal balance side. It's normal for us to drive our cars on the left side of the car. Like we're in the car on the left side. Okay, think of it that way. Okay? If you go somewhere else, like over in Europe, a lot of their cars you drive on the right, I'm not saying the right side of the road, but just the right side inside the car. That's normal for us to jump in and the driver's seat is in the left side. So that's kind of like this. The normal balance side is on the left. Okay? Then also where normal balance sides are where they increase. Put plus signs in there. So if we get cash, are we going to put our number on the left or the right side if cash comes in? It's going to be a debit. What do you think is true for credits? That's the minus side. For any asset, the debit side is the increase. The credit side is the decrease. Now, it's kind of like teaching economics. The concepts are so easy, but it seems like it gets so complicated quick. Okay? This is basic left and right debit credit. Keep in mind, now here's where you have individual ones, yes. What I want you to do is if you have a highlighter on you, if you have a highlighter, do this. I'm trying to think if I have a highlighter option. Yes. With a highlighter, draw something like that. Or if you have a different pen color or just want to draw really dark, do something like what I just did. You're drawing a line down the big T, and then you're drawing an arrow on the left side. Okay? Now with that highlighter, go like this. Each little baby T, because assets are on the left side of the big T, all of the little debits are where the increases are. Is it starting to look like an art project? If accounting could be an art project, this is it, folks. Okay, now we're going to leave the left side and go to the right side. Okay, set your highlighter down for a minute because we have some marking to do. We've moved to the right side of the T. So where do you think the stars are going to go? Where the normal balance is going to go on all of our little T's? On the right side. We know stars equal normal balances. What goes with the star? A plus. What's opposite of the plus in the star? Decrease. Now you could put arrows, increase and decrease, but with all the math that we're going to do, I like using plus and minus. Okay, get your highlighters out again. We're on the right side of the big T, and all of our little guys, that's where the plus sign goes. Is this starting to click? Can we do owner's equity quick? Still on the right side of the big T. So star and star, revenue and capital. Can you tell drawing and expenses we're going to do something different? Let's not touch those for a minute. I want you to really understand this whole left and right thing before I talk about the two naughty accounts. What goes with the normal balance side? Pluses or increases. What's opposite of the normal balance side? So does debit always mean decrease? Debits mean increase if you're an asset. Debits mean decrease if you are liabilities or owner's equity. Why? Highlighters again. We are on the right side of the T, the big T. So the right sides of the little t's are the increases. Now we're going to talk about the naughty accounts later. Give me just a moment here. You might say, Mars, I get it. Left, right, debit, credit, increase, decrease. I get it, but tell me let's do this from an accounting version. So you might even want to take the back page of that big thing that you just did. I'm kind of changing things up on the fly. Okay. Let's about halfway down the page, make a quick allo with me. And then we're not going to do all of them again. Let's do two transactions, okay, that will affect just two accounts. We're going to have cash. We're going to have supplies. And then we're going to have AP over here. Not the Minnesota version of Adrian Peterson, but accounts payable. Okay. Let's do 2 transactions so you can see how this works. We have debits and credits. I want you to do this real quick. Why did I flip-flop my plus and minuses when I got to the liability side? Why is the plus on the right instead of the left? Okay, the credit we're on the right side of the big T, okay? So we're gonna do 2 transactions real fast. Write this down on the top of your page. Bought supplies on account. $100. Okay, you know that from last chapter, right? Do we have 2 accounts impacted here? What did we gain? What did we get? But we also gained owing someone, okay? We now know that with this whole double entry accounting system, we need at least 1 debit and 1 credit. Okay, I'm going to be honest with you, and I'll just write this in a different color. We're gaining supplies, that's our debit. And on account, even if you're fuzzy, you know that has to be a credit, okay? Let's illustrate this down here. Is cash impacted right now? Nope. What did we gain? Okay, are we going to debit or credit that if we get supplies? Okay, so I want you to put plus 100 right here. And then put a little 1 out here because that goes with transaction 1. Okay, I want to just stop right there. I debited something. What does the other half of the transaction have to be? Okay, so I'm going to just put this 100 in, not mark anything else up, and let's think about that. If we got supplies, that's a debit. The other one has to be a credit, but does that make sense? Does AP go up because now we owe more? Here's where accounting, if you get teary-eyed, like this is where it works. Like this, it's right or wrong. And debit and credit, double entry accounting, I got supplies, but now I also owe more. So hence the plus from transaction 1. We have a debit, we have a credit. Our supplies increased because we got more paper and pencils. But this one, once we went over to the right side, also increased because we owe more. And it's simple left-right. Transaction 2. Paid half of the balance owed from transaction 1. So $50. I see the word paid. Are we debiting or crediting cash? Why are we going to credit cash? Because it went down. So if I credited something, even if I don't quite understand it, what does the other part have to be? Debit. Typically, we do the debit first. Typically, when we journalize things, which we'll get into in the second section next week, we debit things first. Okay, so I'm going to debit $50. If I debit something, what does the other half have to be? A credit somewhere. Well, how did I pay for it? Here's where people get teary-eyed, like, oh my gosh, this works out. If I pay cash, is it gone? Yes. And if I reduce what I owe just a little bit less. Now, here's where we're getting a little ahead of ourselves, but this is where you also can see how this works. Make the APT, the accounts payable T account, into an I. What do we still owe? What's our balance? $50. Assuming there was nothing before. Yep. Where am I going to put that 50? On the left or right side? Where's the normal balance side when we're on the big right side of the T? on the right. That's what I mean with normal balance. And then we actually double rule it to say that our math is done. What about cash? Where's the normal balance side of cash though? On the left side, because we're on the left side of the big T. So I'm actually going to put a minus 50 as our balance. What's our supplies balance? 100. That's how this all works from true accounting perspective. Back to the naughty accounts. These two don't like to follow the rules. The rules tell us, like what you just highlighted, we're on the right side of the big T. So credits are where the normal balance sides reside. Credits are what increase. These guys are opposite. They don't want to follow the rules. The normal balance side of drawing and expenses are debits. That's where you're going to see the increase. The credits are where you're going to see the decrease. So you have to train your brain to know that they're opposite of what normal credit or what normal owner's equity accounts are. They don't want to follow the rules and everything's flipped. But let's think about this a minute. They made owner's equity go down last chapter. You didn't get to keep the drawing. You didn't get to keep the expenses, and we subtracted them off. So is it basically like saying all of our capital plus all of our revenue minus our drawings minus our expenses? You knew about the naughty accounts last chapter. It's just now we're putting it into a visual format. What do you think? Is it pretty easy when I present it this way? In theory, well, we put it to the test in here, and this is what we're going to do more of during the second section of this chapter. We got to get the theory part down, and I'll stop and do some actual problem work with you because I could tell you needed that when I was talking. This is what we'll do more of next week. Go to your next page of your handouts. This is just retelling the story again, testing you a little bit. For the first time, well, not really for the first time because we talked about it last time, these are balance sheet guys. Income statement guys are here. Revenue minus expenses to equal hopefully a net income. Okay, that gets factored into the equity. You subtract off drawing to know like a math-based number here. You need a math number here. Debits, of course, mean left. Credits mean right. I'm going to ask this again. I actually just looked at the test. I always like to look at the test before I teach, just so I'm like, oh yeah, I got to hone in on that. One of the test questions is, does debit always mean increase? No. Does debit always mean decrease? No, it depends on which side of the big T you're on, or if you're dealing with the naughty accounts, because all the rules are flipped for them. Okay, so let's plug some stuff in. An asset increasing is a debit. An asset decreasing is a credit. Okay, I don't like the order of this, but we'll come back to that. Liabilities, equity, and revenue are decreases if they're debits. You just got done doing all of this. It's just that the book wants to present it in a different way. So think about this. Here's the T. I'm on the left side of the T, so a left debit would increase. If I go to the right side of the T, the debits are on the left, which means a decrease. Remember this, and I want you to write this right in here. This is a naughty account, meaning it doesn't follow all the other right-based rules. If we go to the credit side, an asset increasing is a credit. An asset decreasing, excuse me, I said that wrong. An asset increasing is a debit. An asset decreasing is a credit. The opposite is true for liabilities and equities. If you understand this, then you know accounting. That's just back to the wrap. It's basically all opposite. So whatever increases as a debit decreases as a credit. You might not like this version of it. I know I didn't. I liked this version a lot better because you could see it a little bit more visually with the big accounting equation. Okay, then there's an amazing thing on page 58 that I've actually taken a snapshot of. What's that? Yeah, this is huge. This is basically all of it in the visual format. One more time. These two are naughty because they do not follow the right-based rules. They go against the right rules of the accounting equation. Every debit, there must be a credit. I cannot say that enough. And you're going to hear me say it all the time when we do the transactions. You know, I know that there's a debit, so the other half has to be a credit. Or I understand the credit, the other half has to be a debit. Page 58 really does a nice job re-explaining all of it too, so you may want to read page 58 again. See how it looked in your notes. Pop a few of those in there. That's it. That's the first section in a nutshell. Do you see why I needed to add all the visuals? Okay. I want to outline the rest of our week while I'm still on the recording so you can hear the plan. What I presented in your notes is all basically the same thing, just done 3 different ways. The first page I came up with. I'm not arguing that mine's better, but to me it visually makes a little bit more sense. All 3 of the versions are really good. So here's what's on deck for the rest of the week. Let me get to my district page. The last 2 days you've done reading and notes. I know you appreciated that time because you were quiet. There was a sense of relief when I said you didn't have to do it at home. So being that it's homecoming week, that's what we're doing. I've done lecture 2-1 now. The rest of the week will be end of chapter stuff that pertains to what we just did. Okay. I am going to give you your first reading quiz on Friday. Notice we haven't even tackled sections 2 or 3, so your reading quiz will all be based on understanding debits, credits, left, right, normal balance, increase, decrease. I'll be honest, this is your 5 points towards your chapter 2 test. Okay? Yes, Ira. Nope, we're going to do all of them together in class. Yep, because whatever we don't finish today and tomorrow, we'll wrap up with Friday, and then we'll do an in-class quiz. So everything will be in class. I'm not going to touch your homecoming week outside of class. Okay. So good question from Myra. Nothing will be homework. If it would be homework, it'd be in the have ready for class column. Okay. Next week then, I don't even have it in, but next week we'll continue with the rest of the chapter, the lectures and problems. The week prior to, like the week of the test, then we'll be doing A set, B set, practice test, all that. Okay. This is a huge chapter as far as understanding the idea of debits and credits, so I want to keep as much in class as I can to be available to answer questions. Because if you get it wrong here, it's going to be a downward spiral for the whole year. So, since we have about 10-15 minutes, let's start with the questions on page 79, 1 through 9. You'd want to just find another spot in your notebook to add the answers. I don't know if we'll get through them all, but we'll give it a shot. I have some wiggle room on Friday to just finish up what we don't finish. Again, the reading quiz isn't hard. It can only be 5 points because I'm only taking 5 of your 100. It's just, it'll be pretty simple. I am going to get better at labeling these. Like I'm going to put page numbers on there so you know exactly where to go. Already into chapter 2, you understand how there's questions, there's brief exercises, and problems, but I'll try to label them a little bit better. Why don't you try to answer number 1? It's around page 79. Try to answer number 1. And we'll see how you do. If you'd rather draw the T account and just label it, you can do that as well. If I look at what number 1 asks, it says to describe the parts of a T account. One thing I want you to add to your notes, T accounts are simply tools. They're nothing formal. We're going to already get into section 2 that gives us what's called a journal to journalize everything, but it's really important to know it's basically the training wheels of a bike. Okay. A T account has a title. So whether it's cash or supplies or accounts payable, notes payable, the title of the account is in there. Each little T will have a left and right side, which now we know from the accounting perspective means debit and credit. One thing that the answer key didn't say, and you might want to add, is that your normal balance will be updated. So kind of like where the single and double ruling would happen. We'd make our T into an I, put the updated balance in, and then double rule. So the balance, basically. Where does the normal balance reside? Wherever the pluses are. Okay. Let's do number 2 together. The terms debit and credit mean increase and decrease respectively. Do you agree? I don't agree. It works for assets and it works for the 2 naughty accounts, but it truly matters which side of the big T that you're on. All you need to know about debit and credit means left and right, not increase and decrease. Debit means left, credit means right. I would like you to add to your number 2 answer that how they describe it here, debit means increase, credit means decrease. That works for assets. And that works for the 2 naughty accounts that don't follow the rules. Debits will increase if you're on the left side. How question 2 is worded would be true if it was all flipped around. Okay. Number 3, Keith Precourt, a fellow student, contends that the double entry system means each transaction must be recorded twice. No. Double entry means you're going to have 1 debit and 1 credit. In a dual manner, it's affecting 2 or more things in the big accounting equation. Double entry accounting simply means it has a dual effect of the transaction on the accounting equation, and you need to have at least 1 debit and 1 credit. Can you guys think of an example when you'd have more than 1 debit and credit? We had a couple of transactions last chapter. Sydney, Ira? Is that what you were going to say, Sydney? So if I bought supplies, that'd be a debit. And I put half of it on account, that'd be a credit. But then if I paid cash, if cash was going down, that'd be a credit as well. Number 4, Erica Mendez, a beginning accounting student, believes debit balances are favorable and credit balances are unfavorable. Is she correct? No, she's not correct, because it depends on which side of the T you're on. A debit balance is favorable if it's a debit to cash, because that means you're getting cash. A credit balance is favorable if you are selling something and you have revenue. So kind of like up here that debit means increase, credit means decrease. That's not true. You have to think, visualize that big T spanning over the accounting equation, what's on the left, what's on the right. And that pushes where the increases and decreases are in the little mini accounts. Number 5, state the rules of debit and credit as applied to assets, liabilities, owner's equity, and then all the 4 things under there. So we're going to state the rules. Are we ready? Assets, and you don't have to, you can abbreviate. You can put DR and CR and plus and minus, okay? Assets have increases to the debit side, decreases to the credit side. Why? Because they are on the left side of the big T, so the left sides will increase. We know left means debit. Are we leaving the left side and moving over to the right side now to start talking about liabilities? We are. So liabilities are actually a plus to credit, a minus to debit, because we've now moved to the right side, so the right side of the little t's are where their pluses will be. What's weird about owner's equity? Are there a couple naughty accounts in there? Yeah. I'm going to draw the answer here instead because it's kind of annoying. Okay, so for owner's equity, capital and revenue, I'm visual. I draw the T's all the time. Debit, credit, the plus is on the credit side, the minus is on the debit side. Because it's on the right side of the big T. But then remember we have drawing and expenses And if you even want to put like a mad face over those to remember those don't follow the right-based rules, yeah, they still have a debit and credit on each side because every account does. It's just that the debit is the plus, the credit is the minus. The debit is the plus, the credit is the minus, because although they're on the right side and you'd think the right side of the mini T's would drive it, they're naughty. They contradict what owner's equity is worth. I want to stop at number 5. We're going to do 7, 8, 9 first thing tomorrow.